As a potential tenant, passing a financial check is one of the most critical steps in securing a rental property. Landlords and property managers rely on these checks to ensure that you are financially responsible and capable of paying rent on time. A financial check typically includes a review of your credit history, income, and overall financial behavior. If you're looking to increase your chances of being approved for a rental property, it's essential to understand what landlords are specifically looking for in a financial check. This video outlines the top 10 things landlords look for when reviewing your financial background. 1. Credit score. One of the first things a landlord checks is your credit score. Your credit score provides a snapshot of your financial health and how reliably you've managed credit in the past. A higher credit score, typically above 650, suggests that you are financially responsible and likely to pay your rent on time. A low credit score, on the other hand, may raise concerns about your ability to meet financial obligations. Landlords often require a minimum credit score to approve tenants, but the required score can vary depending on the property, location, and landlord's policies. If your credit score is on the lower side, you might still be able to secure the rental by offering a larger security deposit or providing a co-signer. 2. Income verification. Landlords need to ensure that you have a stable income to cover your rent and other living expenses. Most landlords will ask for proof of income, which can include recent pay stubs, bank statements, or tax returns. The general rule of thumb is that your monthly income should be at least 2.5 to 3 times the amount of your monthly rent. This ratio ensures that you can afford the rent without compromising other financial responsibilities. For self-employed individuals, landlords may ask for additional documentation, such as business tax returns or profit and loss statements. If you have fluctuating income, a landlord may look for patterns that show you're still able to meet your financial obligations. 3. Employment stability. Landlords want tenants who have steady, reliable incomes. Employment stability is a key factor in evaluating your financial reliability. If you've been at the same job for a long time, it suggests job security and a consistent income stream. On the other hand, frequent job changes or gaps in employment may raise red flags for landlords, as they might signal financial instability. To reassure a landlord, you can provide details about your current employment status, such as the length of time you've been with your employer or any recent promotions or raises that increase your income. 4. Rent history. Your rent payment history is another important aspect of your financial check. Landlords want to know that you've been responsible in the past when it comes to paying rent on time. This can be verified through references from previous landlords or property management companies. If you've consistently paid your rent on time, it helps demonstrate your reliability as a tenant. However, if you have a history of late payments, evictions, or disputes with former landlords, it may be more difficult to secure a rental. To improve your chances, be honest about your past rental history and provide context if necessary. 5. Debt-to-income ratio. Landlords often review your debt-to-income (DTI) ratio as part of the financial check. This ratio compares your monthly debt obligations, including credit card payments, student loans, and car loans, to your monthly income. A lower DTI ratio indicates that you're not overburdened by debt and have the financial capacity to pay rent. Typically, a DTI ratio of 30% or lower is ideal. If your ratio is higher, landlords may be concerned that you won't have enough money left over to cover your rent or other living expenses. In this case, providing additional documentation, such as a higher income, may help alleviate concerns. 6. Savings and emergency fund. While it's not always a formal requirement, landlords may look for signs that you have some savings or an emergency fund. Having a financial cushion shows that you are prepared for unexpected expenses, such as medical bills or car repairs, without falling behind on your rent. If you have a significant amount of savings or a solid emergency fund, this can give landlords confidence that you're financially responsible and will be able to handle any unforeseen financial challenges. While landlords typically don't ask for details about your savings, offering to share this information can help demonstrate your financial reliability. 7. Bank statements. Landlords may ask for recent bank statements to gain insight into your financial habits. These statements provide a clearer picture of your spending patterns, income deposits, and overall financial behavior. Bank statements help landlords assess whether you consistently maintain a positive balance, pay bills on time, and avoid overdrafts. If your bank statements show that you consistently live within your means, this can reassure a landlord that you'll be able to meet your rent payments. Conversely, if your bank statements show frequent overdrafts or unsteady income, landlords may view this as a red flag. 8. Criminal background check. While not strictly part of a financial check, many landlords perform a criminal background check to assess your overall reliability as a tenant. If you have a criminal record, particularly for offenses related to theft, fraud, or violent behavior, it could raise concerns for landlords regarding your suitability as a tenant. Having a clean criminal record doesn't guarantee approval, but it can certainly improve your chances. If you have a criminal history, consider providing context, such as the length of time since the offense and your efforts to turn your life around, when speaking with potential landlords. 9. Co-signer or guarantor. If your financial background is less than perfect, having a co-signer or guarantor can be a helpful strategy to get approved for a rental. A co-signer is typically someone with strong financial credentials who agrees to take on responsibility for the rent if you fail to make payments. Landlords will be more likely to approve your application if you can provide a co-signer with a solid credit history, stable income, and low debt-to-income ratio. This provides additional assurance that the rent will be paid on time, even if you face financial challenges. 10. Rental insurance. Some landlords may also require tenants to have rental insurance as part of the leasing agreement. Rental insurance protects both the tenant and the landlord in the event of property damage, theft, or liability claims. Having rental insurance in place shows that you are a responsible tenant and prepared for unexpected events. While rental insurance is typically an additional expense, it can be a small price to pay for securing the rental property. If your landlord requires insurance, be sure to provide proof of coverage before moving in. Landlords want to ensure that their properties are rented to financially responsible tenants who can pay rent on time and maintain the property. By understanding what landlords look for in a financial check, such as your credit score, income, employment stability, and rent history, you can improve your chances of securing the rental property. Being proactive about your financial situation, maintaining a solid credit history, and providing clear documentation can help you present yourself as a strong candidate. If you have any financial concerns, consider addressing them directly with the landlord or providing a co-signer to help ease their worries. By doing so, you can increase your likelihood of getting approved for the rental property you want.